Prices at the grocery store, at the gas pump, and on your rent bill all feel painfully high, even though the news keeps saying inflation is falling. Why does life still feel so expensive? First, we need to separate two ideas that often get blurred together: inflation and the price level. Inflation is the rate at which prices are rising over a period of time, usually compared with the same month a year earlier. When headlines say inflation is down from 9% to around 3%, they mean prices are still going up but more slowly than before. The price level is where prices have already landed after all those increases have piled up. Think of it like driving uphill. When inflation was high, you were climbing a very steep hill. Now the hill has become less steep, but you're still going up, and you are already much higher than when you started. Falling inflation does not mean prices go back down, it just means they are not rising as fast as before. That's the first reason everything feels expensive. The big jump in prices from the last few years is still baked into today's price tags. The second reason is that inflation compounds over time. If prices jump a lot for 2 or 3 years in a row, each year's increase stacks on top of the last. Even if inflation moderates later, you're now paying the new higher baseline. Data from official statistics show exactly this pattern. There was a period where inflation surged well above the typical 2% target, reaching around 9% at its peak in some economies before easing back down. When inflation cooled, it didn't rewind prices, it just slowed the pace of further increases. So when you hear inflation is 3% this year, that's 3% on top of the large jumps you already endured in previous years, not a discount back to the old prices. The third reason everything feels expensive is that the official inflation number is an average that may not match your life. Headline inflation is usually based on a basket of goods and services used by an average urban household. But your own spending might be very different. Maybe you pay high rent, commute by car, and buy a lot of groceries, or you're paying for childcare and tuition. Some categories have risen far faster than the overall average, including housing, education, and healthcare. Others, like some electronics or communication services, have been flat or even cheaper over time. If a big share of your budget goes to the categories that have outpaced the average, your personal inflation rate is higher than what the headlines say. So even when the official inflation rate is down, the part of the economy you actually buy may still feel painfully high. A fourth factor is that many prices are sticky. They go up easily but rarely come back down. During the period of high inflation, companies faced higher costs for inputs like shipping, energy, raw materials, and wages. To protect their profit margins, they raised prices on goods like food, household products, and services. Later, as supply chains improved and some cost pressures eased, many businesses did not fully reverse those price hikes. In some cases, firms realized that consumers were still willing to pay the new higher prices, so there was little incentive to cut them. This shows up clearly in categories like groceries, where prices jumped sharply during the supply chain disruptions and then stayed elevated instead of retreating to earlier levels. To the consumer, it feels like a one-way ratchet. Prices rise quickly but drop slowly or not at all. Another reason life feels so expensive is that some of the biggest costs in a household budget are structurally higher and hard to avoid. Housing is a major example. Rents and home prices climbed rapidly in many areas during and after the pandemic, driven by limited supply, strong demand, and low interest rates at the time. When interest rates later rose to fight inflation, mortgage payments on new loans became more expensive even if home prices stopped rising as fast. Higher interest rates also affect other forms of debt like credit cards and auto loans. When borrowing costs rise, more of each payment goes toward interest rather than the actual principal, leaving households feeling squeezed each month. Businesses face higher financing costs too, and they often pass those on through higher prices for goods and services. All of this makes essential categories like housing, cars, and basic services feel structurally more expensive, regardless of what the short-term inflation rate is doing. Even if your paycheck has gone up, it may not have kept pace with past price increases. When prices rise faster than wages, your real purchasing power, what your income can actually buy, falls. If inflation cools but your wage growth remains modest, that lost ground isn't automatically restored. Some data show that wages have increased, but often not enough to fully offset the cumulative spike in prices for essentials. So things cost more and I don't feel richer can both be true at the same time. Even in a period of slowing inflation, expectations also matter. People got used to a certain mental benchmark for what groceries, rent, or a night out should cost. When prices shift rapidly, it takes time for those mental anchors to adjust, so the new normal feels unfair or shocking. There is also a psychological piece. Our brains are wired to focus on losses and negative surprises more than on gains. When the price of gas jumps from $30 to $40 a tank, that extra hit is immediately noticeable and emotionally charged. When a laptop gets better and cheaper over time, or your phone plan offers more data for the same price, those quiet improvements often go unnoticed. This bias means we mentally record every painful price increase on staples like food, rent, and utilities, but we rarely celebrate cheaper or better tech or lower prices in categories we don't buy often. So our day-to-day narrative becomes everything is getting more expensive, even when some prices are flat or falling. Another source of confusion is the difference between disinflation and deflation. Disinflation is what many economies have been experiencing recently. Inflation is still positive, but the rate is slowing. For example, inflation easing from 9% down to 3% is disinflation. Prices are still rising, just not as fast as before. Deflation, by contrast, is when the overall price level actually falls. This would be the world where your grocery bill or rent genuinely goes down across the board from one year to the next. Most central banks deliberately try to avoid deflation because falling prices can encourage people and businesses to delay spending, which can hurt economic growth. Instead, they target a modest, steady rate of inflation, commonly around 2%. That means the system is designed so that prices generally go up a little bit each year, not down, even when policymakers say inflation is under control. Putting all of this together explains the disconnect between what you feel and what the headlines say. You live with the price level, the rent you owe this month, the grocery bill this week, the car payment today. Those prices are the product of several years of elevated inflation, compounding increases, sticky pricing, and higher structural costs like housing and debt. The headlines talk about the inflation rate, the percentage change compared to a year ago. That number can move down, signaling that things are no longer spiraling as quickly, while leaving you stuck with the already high prices that accumulated during the surge. On top of that, your personal basket of expenses may have risen faster than the average. Your wages may not have fully caught up, and your brain pays extra attention to every painful price increase. From your perspective, it's not surprising that everything feels expensive, because in many meaningful ways it is. When you hear that inflation is down but your wallet still feels squeezed, you're not imagining things. Inflation slowing is about how fast prices are rising now, not about undoing the large price increases of the past few years. High price levels, sticky costs in critical areas like housing and groceries, weak wage catch-up, and the way our minds focus on losses all combine to make life feel expensive long after the inflation surge has peaked. Understanding this gap between the statistics and your lived experience helps explain why, even in a world of cooling inflation, everything still feels so expensive.